Friday, January 10th. Market analysis, Stan Ehrlich, 9:51 California time. And we always start out with the stock market indexes, the E-mini usually first. You can go to futures. And today will be the last day. I'll mention this year's Santa Claus rally, which made a little bit of money, not much. Kind of like the bill you get at Costco every time you go, a couple $100 plus. So we have the E-mini and the other indexes starting to break down. Maybe we have a new low this morning, and that is a new low since late October or very early November. Yeah, November 4th, or close to that low, November 4th, for the E-mini, ES. Now, if you're going to break down, typically speaking, you'll close below relatively recent last week or two, month or two lows and drop for a day or two more for a typical normal downside breakout. But when you make new lows and you pop back up again and close above those recent lows, you get a washout sometimes and it pops right back up again like a ping pong ball being pushed underwater and let go. So right now, we have rallied a little bit above the previous low, and that was a very good buy signal on December 20th. Remember that date. It's going to be important for other indexes as well. And if we stay above the December 20th low, we may be turning back up and support may be holding after it was washed out a little bit. And we'll see what happens here. We are very close to oversold. So that is supporting the potential of a turn up. It would be better if we were absolutely oversold, and it would be better if we were in a support area. And there is some support at around or a hair above today's lows. So this is a critical juncture. We'll probably know in a day or two whether it's going to come down a chunk more. And if that's going to be true, we're going to close below, again, December 20th low. And we'll probably come down to a minimum of 57.96. That's easy. And it may even happen today. The next support level, not particularly fantastic, 57.11. But I got to say, all the way down to 55.20 something is where the best support is for the E-mini. Now, if we do hold and the market starts to rally, we're going to need to close above today's high for the first minor bullish indication, and then above the high a few days ago to be 60.68 approximately, and then above that high, and then, of course, a new high ground, and you're off and running or have been off and running. Next chart is simply the 5-minute data I'm using today, and there's very little indication that we're turning around to any significant degree. A nice little bounce at the moment, but it happens to be right smack dab at the low on January 2nd. A minor resistance area. A low that I did not want to have broken, but it has been. So if we turn down from here, not good, bearish. But if we keep going up, stay up, and close higher than where we are, well, that's your potential washout. Excuse me. Now, Spider, same story as you would expect. Not really much more to say. Got to close above recent rally highs in order to perpetuate the longer term bull trend. By the way, I'm remembering there's an old saying that the way January goes, meaning is January an up month from the end of December to the end of January, or is January a down month? If January is a down month, that's theoretically, historically, an old saying. That's the way the year is going to go, down. On the other hand, if January closes higher than December, the opposite, the year is going to be an up year. Just so I thought I'd throw that out to you. They don't always work, but historical sayings like that are around for a reason because they are, well, let's just say 51% of the time working. Probably a lot better than that, but whatever. Santa Claus Rally's got something along the lines of a 90% of the time in the last 30 plus years. The October lows are even a little bit better than that. But this January saying, I'm not sure about the historical likelihoods. Okay, we're looking at, oops, something happened here. The scale got goofed up on my spider 5-minute. So I think I'm just going to pass on this chart for the moment. Not too much to say. We can see because of the RSI coming up that we're rallying very slightly. I'll just fix this later. Now, QQQ. New lows a week ago or so, a bounce that didn't make a higher high. Today, another new low, but maybe getting towards support, fairly good support, starting right about the low of the day or a little bit under. So I think we could actually work a little bit lower on the Qs. It's not holding up quite as well, quite as fast as the other indexes, which have relatively flat last couple of lows. And I'm again referring to December 20th low. A week or two ago, we broke it, but didn't close below the previous low, and it popped back up for a couple of days. But that's it. Then it came down to today's new low again. You know, this looks a little bit like a downward slanting channel, which is a bullish formation in the end. But while it lasts, you're making new lows periodically. But it's not particularly part of a bear market. A downward slanting channel is typically part of a bullish trend, a longer term bullish trend. And the 5-minute data for the QQQ. New lows, bouncing relatively well. Minor double bottom today, last night, and this morning. We'll see if it can close really strong near the high of the day or even higher than the high of the day so far. In particular, if any of these indexes close higher than the previous close, yesterday's close, that would be a very good indication we're going to have some more strength. Next, NASDAQ, NQ, new low, bounce above previous lows for the moment. Same kind of comment as I've had on the other indexes. And the 5-minute chart, minor little double bottom, nothing particularly special. Okay, now, sorry about the cough. Now, YM, lower low today, and we're staying below previous lows at the moment, while the other indexes have managed to come up above a little bit. So can the other indexes pull up the YM so it doesn't close below December 20th? Great, bullish buy signal, lasted a few days, made some money, but it didn't turn the market big time like other buy signals we've got for the ER signal technique. And that would be like on August 8th, 24, and of course, auxiliary August 13th signal. They started a bull move that has lasted quite a while and huge longer term. Now, the current situation is oversold. I like that, but there's no support level at the moment. This is a little tricky here. It's also on a Friday, which adds a little more validity, weekly closings to the signals. So we'll see. And of course, the 5-minute chart. And I don't know why I've got that line there. Remove that. And I guess it's got a double line. And a triple. Yeah, there we go. And I'm going to remove that one also. I know what I was doing earlier, a little research. And there's a little marker right there. Delete that too. Good. Okay, so we really need to come up quite a bit. In fact, I would have to say we need to close at 42.90, 42.946 in order to really get the ball rolling on the upside. It will probably stall out in the ballpark of 42.600 to maybe 42.680 if it can get that high in the first place. And also maybe right here at 42.462 on any significant bounce at the moment. Next, RTY, Russell, well into a major historical support level and oversold. So this actually has better chances of turning up, but I don't like the chart formation situation. It had somewhat of an upper slanting channel here, and that broke out to the downside. This probably looks like the most bearish chart I've got that I've showed you so far, staying down well below previous lows. The only good thing I can say is oversold conditions imply a bounce, but it may just simply stop when it gets back up to the resistance area up here. This is the first time we've gotten way into the support area, and you'll have to get pretty close to the high of the day today in order to get back out of this thing again. And in the process, you're going to be pushing up against these previous lows. That does not look particularly likely. And the 5-minute data for the Russell. Okay, bonds and notes. I've erased all references to the broad 2-year double bottom formation, hidden shoulder bottom formation, because it just took too long and it went down too far and it's not turning around, and I've given it every chance I could. It started to act pretty good back here in late or early November and mid-November, but the rally stopped at resistance and overbought conditions, which I was expecting to see a minor correction and not all this stuff into new low ground completely since last October. Now, what about a long-term bull market? Well, maybe we're going to have a broad double bottom, and that means you're going to come down to approximately 107, 8, 6, something like that. And it may be relatively soon. That's not going to help the stock market. Probably that's going to be affecting it bearishly, I would expect. But then things are going to turn, all of them, interest rate futures and stock indexes, up. So we'll watch for that correlation. Notes are closer to doing the same thing because they're overbought now and at the previous lows that we had back in October of last year. So this is set up right now for a potential broad double bottom. So we got to start to see this thing rally. I can permit it to go a little bit lower short term, maybe down to 106, 107 flat, let's say, maybe in the high 106 area, but not too much lower than that, and then turn up. It's got to do it pretty soon, and it's got to do it relatively close to the current quotes, within, say, a point or something. Crude blew through the major bear trend line, got overbought again, and looks like a major bullish breakout for a very large let's see, it's about a damn near a 2-year pennant formation. Long-term bear trend line, if you don't like the pennant, that exists, has approximately 4 points on it, or it did, including the last few days, but it got broken. We're through it. We're staying above it. Now it's a matter of whether we can stop or not on the way up at these resistance levels that I've got marked out here. So I'm bullish. I can't help it in crude oil, and we'll see how this looks for the heating oil and unleaded in a moment. So crude's turned bullish. Intermediate to longer term. Big formation involved here. A lot of major support held very, very well over a lot of time. Heating oil up against the major bear trend line at the top of what is also a downward slanting channel. Can it blow through the top and get to and above these resistance levels, which are not very far above the market? But we might need a little more time because we are now overbought rather significantly at 83. So the likelihood of it dribbling sideways to a little bit lower for a week or maybe two, and then in new high ground through the trend line, is very possible. I might add we had a bearish engulfing for this heating oil yesterday, and it obviously didn't work immediately. So we have a small loss on our ER1 overnight, but not necessarily on the ER1 scalp day trade, which I can't show you on the daily data chart because it's hidden inside yesterday's price range. It's a scalp. So knowing that the bottom wick is somewhat below the previous day's low allows for the scalp trade to probably made a squeak, or it lost very, very little. All right. Intermediate to longer term could be bullish. I just need it to close well above today's high, which would be above the bear trend line, and then we'll talk bullish more. Right now, maybe a small correction, then up. Natural gas, bearish engulfing yesterday, didn't work. Got stopped out today immediately. Day trade scalp looks like it did make some money, but the overnight ER1 lost some. So here we are up against resistance, but we're not yet overbought. So this supports an up move, plus the fact that we have the head and shoulder bottom. We bought the first shoulder low August 28th, exactly on the low day. And you guys know I point these things out the day they happen. And if they happen after my YouTube is over before the close, then I point them out the next day. But frequently they do develop before my YouTube, so I talk about them as they are showing real time. Now here's another one, smack dab on the bottom of the head and shoulder, which is great. We got 2 out of 3 lows to the exact day. And we got a rally high before it came down to make the head of the formation. And we got a rally high before it came down to make its last shoulder lows. You realize that's bottom, top, and we missed the last low. Not bad. 4 out of 5 in a discernible, noticeable, standard historical chart pattern. Great. Oh, yeah. Plus the fact that the head by itself was a small head and shoulder bottom that worked in 1, 2, 3, 4 days. Okay, yesterday's bearish engulfing didn't work, but look at the bigger pattern here. We broke out of the neckline of the head and shoulder bottom, a little rally, came back down, tested the neckline, popped in a new high ground dramatically, and I believe the story was that the national weather forecast was colder for the eastern part of the United States on that morning that caused this one-day rally, caused the gap up. Now, gaps are almost always closed. I said it on that day, which was December 30th. 1, 2, 3 days later, we closed the gap and tested the neckline again very accurately and turned around and all of a sudden had a bearish engulfing yesterday. I thought that that was going to kill the head and shoulder top and we were going to start to go below the neckline, but I was wrong. This signal turns out to be a bad one. Luckily, they don't happen that often. That's why I love this strategy. The ones that work sometimes incredibly good. Again, I reiterate, bought the bottom, sold the high, bought the low, sold the high 4 times in a row. So this one didn't work. Small loss. We always have an immediate, instantaneous protective stop in, and I call it the STS, the smart trailing stop, and it's always relatively close. So we never have a large loss. Now, up into resistance, but nowhere near overbought. Looks like it's going to go higher also. Now, what about gold, silver, platinum, copper? And then we'll look at the grains. Overbought copper, gold. Around a bear trend line, but I haven't drawn the line in. Let's do that real quick here. And we'll go to the top and we'll come across that high right there. But if you do that, we're right at that line, aren't we? Yeah. Closing a little lower than where we are could cause it to pull back because the overbought and the line. Closing higher than where we are, obviously breaking the line. And as the trend is up, to say the least. So I favor whether there's a minor short-term downside dip or it just keeps going, I favor up. I have to because the long-term trend, higher lows over a significant amount of time. And I think we're going to start making higher highs again. Now, silver's not quite the same. Came down a lot more for a longer period. It doesn't have quite the same technical situation, but we did hold, created a small double bottom around some support. I'm neutral to friendly in silver. Last sell signal worked very nicely, down for a week or so into oversold. This sell signal didn't work, but there was a chance to make a little bit on that one. This buy signal is exactly the why I developed the strategy to begin with, ER signals. It worked great. And again, this one worked pretty good. I haven't got one last few weeks, so neutral to bullish on silver. Platinum going through some resistance, bottoming out on a broad, major, large, long-term support range, and making new highs now for a couple of months. Not overbought, but close, very close. So this particular rally may fizzle out, have a small correction, and then keep on going up, bullish on platinum. What about copper? Well, last couple, 3 days, today included, is overbought. They're overbought. And you're up against a previous little rally high here, resistance on 1212. And there's evidence of some other significant resistance, and I probably should draw this in as a resistance area. I haven't done that yet. Let's do that. Control F12. Okay, so I'm going to go back to here and go down to that high and then stretch it a little bit. That's not bad. On the way down, bounced off of it, had trouble, topped out, overbought, might be topping out here. You realize we're back to essentially unchanged already. And if we get below yesterday's low, we'll have a bearish engulfing sell signal like 1212. Doesn't look like that's going to happen, but it could. Okay, soybeans. New high now from early November. Potential. Broad double bottom, looking a lot more potential. Oversold in both cases, a bullish engulfing in one case around the bottom. I think I'll mention broad double bottom. Could be starting something very, very, very significant long term. It cracked a bearish trend line, but didn't stay above it so far today. I'd like to see it close above 1047 to be a lot more convincing about the double bottom, but we're starting. We're starting to make new highs for a good time, good 2-month time period. So other than the overbought condition, which does bother me a lot, and it just barely got to overbought. What was the RSI high? 75.5. So, this is a custom RSI, relative strength index. I learned RSI from Wells Wilder himself. I don't use the same look backs. I don't use the same visual displays that he was using. And there's some other custom changes also in my RSI. And it works pretty darn well. Every time you get oversold, the market tends to turn up, and I've got colors and markers for other things as well. So I'm now officially turning at least neutral to maybe bullish. And that would mean intermediate, short term, and maybe longer term, but not really long term yet. You got to really leave some damn significant amount of time behind you and price action behind you also in order to justify very bullish long-term situations usually. What about meal, oil, soybean oil? Well, man, we just took off like a bat out of hell the last couple of days, went up to resistance and went through it today like crazy, and all the way up to 85 in the RSI, which is relatively rare. Every time we've recently gone up to 85, it was almost 85 here. Well, that looks like it was actually 84.21, and it topped out for a bit. Last time we were up to 85, and we were only actually up to about 88 or 89. It topped out substantially, and not too much higher than the current quotes. I wouldn't want to be a buyer here, I'll put it that way. But I could see a little bit more strength up to the next resistance area, 4670, before it turns down. Don't chase markets. That's what my ER signals do not do. They help you pick the bottom or the top of market moves, the very beginning of a turn, and therefore not chasing a market down or chasing it up. If you buy oil here, you're absolutely chasing it up. I wouldn't do that. So very good possibility of a short-term correction because of the severe overbought condition. Next, meal. Not the same at all. Now you'll notice that we have an outside trading range today in meal, but it is an outside down day. Not oversold. In a support area, yes. But I have occasionally mentioned a little formation I call a bass backwards engulfing. This outside down day looks normally like a bearish signal, bearish engulfing. But because of it being close to oversold in a support area, I've seen many of these actually be a low. But I can't get my handle on exactly how to manage a trade if I were to be a buyer for some reason here. So I'm looking for it to turn up because of some conditions, the support area, mostly, and maybe this outside range. If we just climb a little bit, it'll be an outside up day bullish engulfing, and I have no problem saying dumped into support, turned around, bullish engulfing, and we're going to rally. But this, at the moment, does not look, for most people, like that is going to happen. Bullish breakout of sorts in corn. Now, this is a new high since July, late June, again. And we have a head and shoulder bottom well underway. Let me expand this a little more detail on the pattern. Good. First shoulder low back in July. Head of the formation was a little double bottom sort of on August 26, 27. And the last shoulder low, we did get a bullish engulfing on exactly on the low. And frankly, we're just one day off of it also in the first shoulder low, July 12th. But we did get it bingo on October 17th to the exact date. Corn. This bearish engulfing did not work. I'm liking this pattern as much as I did on the upside breakout. It was a false one to start with for 1 or 2 days, pulled back, which is usually a very big no-no for head and shoulder patterns, crossing on the other side of the neckline after the breakout. But we had another breakout. And this time a bearish engulfing failed. Now just exploded into high ground. Very strong upside move. And the head and shoulder bottom has been suggesting ever since the first breakout a minimum upside objective since October 10th of about 494. Here we go. I've got about 30 more cents, I think, from the current quote, higher to get to my objective, plus a little bit more. Bullish, obviously. Next. Oh, yeah, the bullish engulfing, the overbought condition does allow for a minor correction, very possibly back to about 460 or a slight bit under, 455 to 460, and then higher. Next, we've got an outside trading day down at the moment on wheat, outside down day. You've got a new low by a little bit for many months since the war started. And we got a sell signal on top the day the war started. Those people who haven't seen that yet, this is a bearish engulfing ER sell signal right there on, March 8th, I believe, of 22. The tie day double limit move, limit up to limit down. And we caught it the day it happened. Basic standard rules, dramatic is crazy, that's true, but boy, did it work like nuts. You got to be awful gutsy to be involved in that kind of stuff. Margins through the roof, volatility extreme, biggest in years, blah, blah, blah. Huge volatility. But now what? Double bottom in wheat? Maybe. I actually kind of like this. We're dribbling around a trend line, can't stay over it, can't stay under it, staying on it, basically. But I'm looking at the double bottom potentials. If I close higher today, I'll scream bloody murder, outside up day, bullish engulfing. But it's not a signal we're sold. There's some potential here. That's about the best I can say. I need more proof. What about cattle? Overbought, very much so. New high ground staying there. Looks like it could even move a little bit higher before it finally runs out of steam here and has a correction. I would expect minimum 193 downside correction, 191. Let's call it maybe down to 190. And we're now at 198 at the moment. So anytime this could bend over and drop down, but I don't see it happening quite yet, but we're close. Hogs did bottom out, had a very sharp rally yesterday. These commodity markets, New York's and Chicago's, were open on Carter's funeral day yesterday, but the stocks were closed and stock indexes were mostly not traded because the stocks closed, New York Stock Exchange. So I'm looking for more strength, uptrend, maybe some kind of a longer term top formation, but not yet. I'm just looking for more of a rally. We've reached the first resistance area at today's high already. The next one probably is going to be around 88, 89 even. Yeah, 89, 88. Next, this is that stock that I've been monitoring for you guys for at least a month or two now, day by day. It did form a nice little head and shoulder top. It's not great. All in one day on December 18th, which is not that common. You had a high, which is the last shoulder high. It turned around with a huge bearish engulfing, broke the neckline, it had a major downside breakout, and closed in new lows for about a month, all in one day. After a little bounce and a new low and another higher bounce, none of which got above the neckline, so that wasn't violated. But now we see new lows and a downside, I think, exhaustion gap, meeting finally my minimum downside objective, which was 82.5, which I've been talking about for weeks. So it got there. Done, past tense. Also, these objectives are minimums. You can go down even further. I don't think we're going to. I think we're going to get into maybe 80, but maybe not. We're very, very close to oversold, and I'm looking for a turn up very soon. And remember, gaps are almost always filled. There are three types of gaps. Four. There's the breakaway gap at the turning point from a top or bottom, fairly rare. There's the exhaustion gap, which we might have seen two of recently. There's the exhaustion gap on the upside, December 3rd to December 4th. Past tense. Done. Is this a downside exhaustion gap and turning bullish soon? I don't know yet. But that's exactly where they would try to form, although I would love it if the damn thing was oversold also, but it's kind of close, not too far away. It also met the objective, so there's definitely potentials of that happening. And let's go back to the mini for a quickie check here. Well, look at here. We've bounced up pretty good. Not great, but, they all start somewhere, moves up and down. So if we can maintain this, which I have my question marks about, we could be at a turn, but I'm too soon to say that. I don't want to say that yet. You guys have a great trading day and profitable trading to you.